All right, welcome back to another episode of the Black Bullion Show. Did gold and silver just do the rope-a-dope against the dollar today? Well, it looked like the reason for gold and silver falling this morning was due to some dollar strength. Both metals were on the ropes, just eating those punches from the dollar, and then boom, they just came back with a vengeance. But hey, economics is a team sport, so we'll see who helped throw, a sucker punch or two against the dollar very, very shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So the dollar had a nice rise up earlier today, but it was short-lived. It immediately fell as soon as it reached its peak, just like Icarus, essentially. Initially, I thought to check its competitors in the DXY, and here we have the euro, and the euro fell as the dollar rose earlier, but vice versa, it also rose when the dollar fell, but it didn't really rise too far past where it was initially before its fall. So, that didn't really, scream out to me anything in particular. But with the pound, on the other hand, the pound really jumped after its fall to the point where it finally got back up to 1.32 to 1, and it hadn't been that high since August 20th. The ratio wasn't that high between the pound and the dollar since August 20th. So why exactly did the pound perform so well today and not the euro? Well, it was because of this dollar smiles as durables data fuels correction, but pound to dollar rate swings back into black. So yes, we did get good durables data, which helped the dollar in its initial climb, but let's see what helped to take it down a bit. So I'm just gonna read this quick paragraph here. The dollar smiled on Wednesday after durable goods data bolstered the outlook for business investment and fueled a correction in US exchange rates. Although this didn't prevent sterling from swinging back into the black following robust demand for new 10-year British government bonds amid rising yields. So the 10-year British bonds, getting a bid definitely helped. Now, the dollar came down around 8:45 a.m. to around 9 a.m. Eastern Standard Time. Guess what else came down around that time as well? If you would have guessed the US 10-year note, then you'd be correct. Now, this the US 10-year yield coming down, showed strength for safe havens, but it was very short-lived thereafter. It just came down very quickly, and then it bounced right back up. But like I said, economics is a team sport. A lot of this action against the dollar really helped metals rise earlier today. Now, let's see exactly what we have going on here with gold and silver. And this is exactly what I like to see. So a nice show of strength from the metals. Silver is back above $27 at $27.10. Gold is back above 1,940, specifically 1,944.23 cents. So things are looking really good for the metals. And seeing gold as low as, like the 19 teens yesterday wasn't really fun. But, hey, remember I mentioned that there will be days that we'll have to grin and bear some of those really nasty sideways or down days. And sometimes that grin will be justified if you find a really good deal with gold and silver. Now, I have a question. Are we actually seeing some excitement before we hear from Jackson Hole tomorrow from Powell? Let's see what we have to expect possibly from Powell himself. In this article here, gold pops 1% higher, looks to erase losses from a day earlier. So let's get into it really quickly. Gold futures gave up an early decline on Wednesday to move higher, with prices on pace to erase their losses from a day earlier and then some, as traders looked to Federal Reserve Chairman Jerome Powell's coming speech at the Jackson Hole, Wyoming Economic Summit for the metal's next big catalyst. Prices for the precious metal had spent time early Wednesday trading lower, pressured on the back of a rise in bond yields and the dollar. The moves come ahead of the highly anticipated speech from Powell, who is expected to provide a more accommodative signal, signaling that the U.S. Central Bank is willing to embark upon an unconventional way of thinking about rising inflation. Powell is expected to advocate for a so-called asymmetric inflation target, one that allows policymakers to let inflation rise above their traditional annual target of 2%, which could be seen as bullish for gold and other precious metals. Now, if that were to happen and we have, let's say, lower for longer nominal rates, I would say expect periods of even weaker, more negative real rates, obviously. Because if we have higher inflation with those lower for longer nominal rates, we're going to have, some like very, very strong to the downside real interest rates. And as we know, they have a strong negative correlation with gold's upswing in prices. Now, I've actually read a couple of studies here, which I'll have to show you in another video, that actually shows the negative correlation and how strong in magnitude it is with negative real rates. I don't want to throw out a number, but I think it was like negative 0.77, which is pretty high, pretty strong for its correlation with negative real rates, or I should say weaker real rates. So again, correlation to gold's upside, and ipso facto silver's performance to the upside as well. So I hope you guys went and bought some popcorn for the Jackson Hole Economic Summit tomorrow. And if you didn't, you still got one more day to go on and get some popcorn as we sit back and watch and see what happens to precious metals. All right, everyone, that was your Wednesday. Please hit that subscribe button if you're new. We have 2 more episodes coming out today. Also, please hit the like button. Helps to get this economic evangelism out there. Thanks again. It's Black Bullion.